Hello and welcome to this weekly market recap for the week ending Wednesday, July 23rd, 2025. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com, and it's a pleasure to be with all of you again this week. I'll tell you, the lesson for me this past week is don't bet against a secular bull market. I think last week I was a little nervous. We had options expiring. That certainly can take a market down from time to time. We had overbought conditions. We still had, worries over inflation, interest rates, the Fed, everything going on, yet the market. Oh, and we also had one of the worst historical weeks of the year, July 17th, which was last Thursday, through July 23rd, which is today, is the third worst week of the year historically on the S&P 500, dating back to 1950. And yet through all of that, the market just powered to more all-time highs. So just a lesson. It's very difficult to bet against a secular bull market. We've been talking about the fact that this market wants to go higher. It continues to show signs of that, and I wouldn't bet against it. Let's take a look at what's happened over the course of last week. Just a reminder, I'm looking at this from last Wednesday's close to this Wednesday's close. Just want to make sure everybody understands. Okay, so looking at the transportation index leading the market last week. So this has been somewhat of a common theme over the past several weeks. Transportation stocks have been doing better and better and better. They've righted the ship. We're now trending above key moving averages. And each time we pull back to a key support level, it holds and we move back up to new highs. That's a really important factor to keep in mind because that is the hallmark of a bull market. When you pull back, you hold on to support and then you break back out again. It's nice to see leadership from the transports. That's a great sign for the S&P 500, as I'll talk about in a few minutes. Russell 2000, the small cap index, S&P 400 mid cap index, also having a good week. You can see those three led. Then we had the Dow Jones, then the S&P, and the most aggressive index, the NASDAQ, was up 1% last week, a little over 1%, but it did lag all of the other major indices, and we'll talk about why throughout the show. Moving on to the top sectors over the last week, consumer discretionary, the number one group. I like to see discretionary stocks moving up. They tend to like the month of July, and this has been no exception. Consumer discretionary up over 3%, over 3.2% last week, leading the move to the upside. All 11 sectors gaining ground, so that was good news. On the bottom, you'll see technology, though, was the laggard. So technology has been leading this market to the upside. Last week, it took a break. And that was the big reason why, if we go back to that first slide that we showed here, the NASDAQ 100 underperforming, that's the big reason why. Technology did not have a good week. I'm going to break it down for you even further here in just a second, and you'll know even more why technology and the NASDAQ group did not do so well. Moving on to the industry groups. So here are the top industry groups relative to the S&P 500. So this is not saying that aluminum went up 10.7%. Instead, what it's saying is that aluminum outperformed the S&P 500 by 10.71%. So aluminum was the best area of the market, followed by recreational products and home construction. It's been a while since we've talked about home construction in positive light, but we had a couple of really good earnings reports earlier in the week. D.R. Horton and Pulte Group both came in with strong results. Both had very positive reactions. Many of the home construction stocks absolutely exploded over the course of last week. And these two areas, recreational products and home construction, part of that consumer discretionary group. And that's part of the reason why we saw that leadership in that area to the upside. I want to point out furnishings because I'm going to talk about furnishings a little bit later in the show, but that was another key component within the consumer discretionary area that performed really well last week. I'm going to flip this and we're going to take a look at what didn't work last week, what underperformed the S&P 500. Tobacco was number one, specialty retailers, healthcare providers, but I want to just dip down here a little bit lower to the number 9 industry group on this list, which is semiconductors. Semiconductors have been on fire. Semiconductors have been leading this advance off of the April low. They took a break last week, and that further helps to explain why technology was on the bottom of the sector leaderboard and why the NASDAQ was on the bottom of the index leaderboard. Semiconductors a big part of both of those areas, and semiconductors clearly not performing very well over the past week. The Dow Jones Industrial Average, I wanted to mention that we closed at 45,010.29 today, which was 4 points below the all-time high close. So it's taken a while, but the Dow Jones is right back up at all-time highs now, maybe, just maybe set to set a new all-time high on Thursday. We'll have to wait and see. S&P 500 continuing to push higher, continuing to set new highs, now up at 6358, almost 60, not too far from 6400. Wasn't that long ago. Last week, we were still looking for 6300 all-time high. Now we're looking up to 6400. It's been that kind of a market. We continue to push higher and higher. NASDAQ 100 set a new high on Monday, closing at an all-time high. We're threatening that again at Wednesday's close, but we'll probably need some leadership from the semiconductors to make that breakout. IWM, small caps, nice breakout today. We had kind of topped earlier in July, right around this 225 area, went back down as low as 217, tested the 20-day moving average, went sideways for a bit, and then on Wednesday made another breakout. That's a really, really nice candle today on small caps. I would expect to see some follow through in the coming days. Transports, I showed this chart last week, I'm pretty sure, but I wanted to show it again because it's really important. Transports, when you see this blue arrow and the transports doing well, and this is the transports in this panel, go to the top panel and this is the S&P 500. But when the transports are moving up like we are right now, it generally leads to a very strong S&P 500. Look at the periods when we have seen strength in transports and look at what happens to the S&P 500. Now, during times when transports struggle, that's where you see the S&P 500 circled, where we might go up and, up sometimes, down sometimes, but during these periods, we really don't go very far at all, if anywhere. We go up, then we come back down, and that normally coincides with a weak transportation group. So it's really important. We've been talking about this now for the last probably 6 weeks or so, maybe a little bit longer than that, 8 weeks. The fact that these transports have continued to power to the upside and to help lead the market. And as that's been occurring off that early April or late March low, notice that's coincided with a very strong advance in the S&P 500. This is normal, folks. This is what we normally see. So anytime we're getting strength from those transports, that's a really good sign for the S&P 500. Home construction. So I pointed out it was the third best performing industry group last week. Look at this candle right here. Now, I had been talking about this group over the last few months, saying that I thought it had bottomed. We got a breakout above 2,200. You can see all these tops at 2,200 on this chart. We broke above and we've come back down and we've tested it twice. Broken resistance becomes support. That's TA 101. Not only did we hold it, but we've now broken out a couple of times since. So it's really, really bullish action to see home construction acting like this. Semiconductors, I want to show you something, and we talked about this months ago, but it's really important because when you start to see a group exhibit leadership, that leadership can last for quite a while. Now, semiconductors are really important because they're weighted so heavily in the S&P 500 and in the NASDAQ 100. So anytime this group is going, it's really important to recognize that. Back in late April, we had a downtrend in play on semiconductors, and we made a breakout. At about that same time, we had a relative downtrend. So semiconductors were not only going down, but they were going down faster than the S&P 500. And you can see that on the relative chart. When we came back up here, I said to watch 3.07, or maybe it was 3.08 on this relative ratio chart. Because once we took that out, we had already broken this downtrend line. And then once we went up and took out that prior high, so we had a series of lower highs. Once we took out this high and went through that 3.07 or 3.08 level, I said that was a really important breakout on semiconductors. And it was one of the reasons why I was so bullish the stock market back when everyone else was still fearful that we were going to go back down again. Anytime you get leadership from semiconductors, normally you do not want to be bearish. Once that leadership starts, semiconductors can carry the market on its shoulders. And that's really what happened here over the last few months. So this past week, you can see semiconductors took a little bit of a breather, pulled back to the 20-day moving average. I suspect that that is going to be short-lived, and I do think we're going to see some new highs on semiconductors as we move throughout the summer months. All right, I'm going to show you, the reason I'm bringing up semiconductors, I'm going to show you another group that's kind of doing what semiconductors did back in April and May. Bottoming, starting to turn back up again. I showed you a little bit with home construction. I'm going to show you furnishings in just a minute. Before I do that, though, I want to go over to earningsbeats.com, my home. If you have not been over to earningsbeats.com, please check it out. Again, that's EarningsBeats, both names plural, earningsbeats.com. You can sign up for a 30-day no-cost trial. It does require a credit card, but we will let you know before your 30 days is up so you can decide if you want to extend or not. You can check that out. If you go down, scroll down toward the bottom of the page, you will see an area where you can sign up for a completely free newsletter, no credit card required. Name and email address, all it takes there. Be sure to check that out. And then finally, I want you to check out in the middle of the page here. I'm making a bold prediction. I think there's an area of the market that's going to go up 50% by year end. It's already made a 10% move in a little over a month. If you go over to earningsbeats.com and you click on that, it will bring you to this landing page where you can simply sign up with your name and email address, and I will send you a video explaining not only which group that I think is going to go higher, but I'm going to show you examples in the past of how this setup has worked previously and some of the things that you should be looking for. So please, if you haven't already signed up for this, check it out. It is completely free, and I'll send it along to you. Now let's take a look at furnishings. So I wanted to show you kind of the similarity to furnishings. Now, furnishings are nowhere near the importance to the S&P 500 that semiconductors are. And I don't want to make, that kind of a bold statement. That's not the case at all. This is a much smaller group. But anytime we start to see leadership in a group, it's worthwhile noting, because if you can find leading stocks in leading industry groups, you can outperform the stock market by a wide margin. A lot of folks say you can't beat the stock market. I completely disagree. We've been doing it now for 7 years with our model portfolio. We're so far ahead of the S&P 500, it's not even close over the last 7 years, and we've done it by finding leading stocks and leading industry groups. So you need to recognize when a group like furnishings makes a breakout, because it goes from an area that's been underperforming to all of a sudden an area that starts to outperform. And if you can find leaders within that space, you can outperform the overall market. And that's really what we're trying to do. So here, furnishings, you can see the downtrend line is broken. We were already starting to trend above the 20-day, which was above the 50, but this breakout kind of confirmed it. If you look down here, kind of a similar setup, not exactly the same, but similar to what we just looked at on the semiconductors. We have a relative downtrend in play. We broke that, and in the process of breaking that, we also took out recent highs, recent relative highs. So now all of a sudden we've got a group that looks like it's starting to trend higher. It pulls back, it put in a higher low, and now it's gone back up to a new relative high. Now I'm looking across here, and we are within a whisker of moving to about a 9-month relative high on furnishings, which I think is a big deal. A lot of money rotating over into the discretionary group right now. And so you want to see which areas in the discretionary space are loved. And this is one of those groups that are loved right now. So here you've got relative strength building. You can see now, once we broke out, look what happened. We came back down. We tested the 20-day moving average, printed a hammer, and moved to a new high. So all of a sudden, we're going from an area of the market that was just sideways consolidating to an area of the market that is showing that it is in an uptrend, both absolute and relative. So again, a breakout on a relative basis down here to about a 9 or 10 month relative high would be a very, very bullish development for a group that's already showing some real strength. So what do you do with this? All right, you see that furnishings are performing much better. We're getting the absolute breakout. We're showing relative strength. How do you find stocks within here? Well, it's pretty simple. At StockCharts, you can just use the scan engine. So you go in here and literally the only thing I put in here was furnishings. So I go down to the bottom here where you have sectors and industry groups, and I found it under discretionary right there, furnishings. I clicked on it and I hit add, and there it is. All I have to do is hit the run scan button, which I've already done. And here are the list of stocks in the furnishings group. And I put it in order of scooter score because this gives us a sense of which stocks maybe are showing us some leadership. And the first stock here, SGI, I pulled up the chart and was looking, and look at this. We've got an AD line that's soaring. That tells us that the stock is likely under accumulation. We've got a beautiful uptrend in play that looks a lot like the furnishings chart, where we went sideways, we made a breakout, we pulled back, hit the 20-day moving average, and bounced to a new high. So it's really nice to see a stock like SGI that's leading this group to the upside. Look at the relative strength of SGI versus the furnishings group. Very, very strong at a 52-week high. And now we've got the group strengthening, trying to make this 9 or 10 month relative high breakout. So again, this is just taking what the market is giving us. We're not trying to force anything. We're letting the market tell us where money is rotating, and then we're looking for our trading candidates within. It's a nice top-down approach to take in order to find some great quality trading candidates. So one of the things that we do at EarningsBeats, I want to just point this out, and a lot of members have really loved. This is one of the latest, actually, it is the latest chart list that we've been providing. I don't know, we've probably been doing this now for a few months. But every week, what I do is I look at the industry groups that are showing relative strength, or industry groups that are just starting to show relative strength. Like gambling stocks more recently have started to show a lot of strength. So they were added into this list of leading industry groups. Once I get my leading industry groups, and usually there are about 12 to 15 of them out of the more than 100 industry groups that are out there. So you narrow it down to the top 10, 12, 15 industry groups. And then I run a scan of those industry groups against our 4 key chart lists at EarningsBeats. One is our strong earnings chart list. One is our strong future earnings chart list. One's our raised guidance chart list, and another is our strong accumulation distribution chart list, strong AD chart list. And what I'm trying to do is find stocks that are in those chart lists that are also in these hot industry groups. And what we do is we end up putting together a chart list that I believe are some of the best momentum stocks that you should be focused on in trading. I want you just to look over the last week, the latest chart list that we put together at the beginning of this week. Over the course of the last week, look at how much some of these stocks have gone up. I mean, we have a 50% winner, 43, 43, 39, 37, 27, 6 stocks on this list more than 25% higher over the course of the last week. And you can see, I mean, a lot of them 10% or more in a week. I mean, you can just continue to go down the list. Many, many stocks outperforming. Again, go back to where we were, major indices. Look at what they went up last week. Anywhere from 2.8% down to 1.1%. And then you go and you look at all of these stocks on this list that are absolutely crushing the major indices. The way you do it is you find leading industry groups and you find stocks that are leaders among those industry groups. Find the groups where money is pouring into, and then find the best looking stocks within those. That's the way you're going to outperform the market. All right, last thing I want to do is just go over some of these earnings that came out after the bell today on Wednesday afternoon. So by the time you get this video, many of these stocks will be trading on Thursday. You can see you'll get much more updated information, updated pricing. After hours, I wanted to go over just a few of these. So Google came out. I haven't had a chance to look at their earnings, but the reaction was slightly positive. Google is up 1.39% after hours. Tesla was down 1.7% after hours. Las Vegas Sands. So this is kind of in that gambling mode where we've seen a lot of strength. You can look at this chart here on Las Vegas Sands, which has been going up. With earnings, it's up another 5.3%. Looks like potentially breaking out to another new high. International Business Machines, IBM. I think this could be an opportunity on the stock, actually. Stock gapping back down to an area where it broke out near the 270 level. They beat on the top line, beat on the bottom line, and raised their guidance. And the stock's down almost 5% after hours. Sometimes things just don't make very good common sense in the stock market. I say many times you get buy on rumor, sell on news. That seems to be the case with IBM. But if it opens down around that 270 level, I think it's actually, it could be a buy given the results. ICLR, this is Icon, big move to the upside, trading up 14% in after hours. Then we got Viking Therapeutics down 7.5% after hours. Max Linear gaining 23% after hours. I'm pretty sure this is in the semiconductor space. So a big mover here for this small cap company. And then finally, the last one I had for you, Chipotle. They're looking at their same store sales being flat next year. And as a result, stock is trading down almost 10% in after hours. So anyway, that's it. Had a lot to go over to try to get through, but that's kind of the summation of what I see over the course of the last week. We'll see where we go, forward next week and beyond. We do have a Fed meeting that is coming up next week. I think that is likely what the market's going to focus on. It's not so much whether they cut rates or not. I think they're probably going to leave rates unchanged. I believe they should cut, but I think we're going to have to look at the language to see if maybe they're getting closer to rate cuts, given the fact that we've had such benign inflation numbers with the tariff, with all the tariffs going on for the last several months, still very little impact. The Fed has said that's the only reason why they haven't cut rates. So it's going to be interesting to see if they make note of that and maybe think about cutting. If they don't cut next week, maybe think about cutting in the meetings ahead. Anyhow, that's it for me. Appreciate everybody tuning in. Have a great rest of your week, everyone. I'll see you next week. Happy trading.